Hello everyone, this is Greg here. Thank you for watching the video. And today let's talk about Broadcom, AVGO. Since it has an earnings report coming soon, I figured let's look at some of the positions we have here. First of all, let's talk about a little bit of a background of this ticker. Now, this is absolutely one of Wall Street's favorite AI stocks, no doubt. And right now, analysts' sentiment is very bullish. As we can see here, one current consensus has 45 buy ratings, 4 holds, and 0 sells. Average price target is around 526. Now, Broadcom is definitely one of the biggest AI players alongside with NVIDIA, but its story is a little different from NVIDIA. So instead of selling like GPUs, Broadcom is mainly a major player in custom AI fields, AI accelerators, and AI networking infrastructures. Its growth has been enormous in the past few years, ridiculously enormous. And for example, in the last quarter, Broadcom reported 22.2 billion in total revenue. That's 48% year over year. And AI is a main contributor to that. For example, its AI semiconductor revenue reached about 10.8 billion. That's a growth of 143% year over year. So that's crazy. And their management says that in this quarter, their AI semiconductor revenue could reach about 16 billion. So that's more than 200% growth compared to a year ago. So its growth is very, very solid, and AI demand is still there, exploding. The general sentiment is bullish, but it has a problem. Similar to NVIDIA, for tickers such as Broadcom, having a great earnings report or beating earnings is just not enough anymore to impress investors, just like NVIDIA. And if we remember what happened to the last earnings report, despite having a great earnings report, this is what happened. The stock crashed, dropping some 12-13% at the time, and so that's crazy. So the market isn't just asking whether Broadcom is growing it anymore. Everybody knows that. The question becomes, is it growing fast enough to justify what investors are already expecting? Because when a company has this much AI enthusiasm behind it, simply reporting good numbers isn't necessarily good enough. Same with NVIDIA, like we discussed in the previous video. Now, Broadcom did talk about AI semiconductor revenue passing some 100 billion in 2027, fiscal 2027. So market is still looking for evidence of that, and so far the trajectory of with everything we're seeing, that's still good, but everybody is having high expectation, hoping that management would raise the bar on that. And there's another thing right now: competition. Broadcom has so it has been a major custom silicon partner for companies building their own AI infrastructures, but recently Marvell expanded its relationship with Google, which has raised some question about whether Broadcom will face more competition in custom AI chips moving forward. With competition, it sort of complicates things. So earnings, well, with such a unique combination, Wall Street is very bullish, as we discussed. AI revenue is growing, impressive growth. Expectation is enormous. But like we said, again, like we saw before in the past quarter, this happened. So our big question is, what is going to happen this time? Are we Are we going to see similar reactions from the market despite good earnings report, or despite earnings report beating? Or are we going to see a different reaction this time? So let's dive deep into the option chains and look at some of the actual positions to try to see where the market is heading, or where some of the bigger players are placing their positions. Alright, as usual, let's start with the vertical positions. Let's look at the spreads here. And again, these are not all of the positions available in the market. These are just some of the bigger, more unique positions picked up by our algorithm, by our system here. Most of these positions are likely coming from institutions, bigger firms. So we can see what some of the bigger players are doing, how they're setting up their positions. So let's look at the first position here. Okay, this is big position, big bullish position, betting that the price will go above 375 in the. By the way, we're in the 28 DTE option chain, about a month out, and yeah, this is bullish. Also betting that it will potentially cross 400 in the coming month. Certainly possible. Let's look at this one. Same thing. This trader is betting that the price will go above 380, potentially passing 410 in about a week. I'm sorry, in about a month. This one as well. So immediately we're seeing a lot of bullish position, a little out of the money here. And yeah, this one is betting that the price will go above 390. Let's continue. This one, I think. Okay, yeah. So this is a position further out of the money. Now keep in mind that there are traders or firms out there shorting the stock as well. So some of the positions further out of the money might be hedging positions. Essentially, they're betting that the price will go down, and but in case if the price doesn't go down and if it goes against them, or with a short squeeze, some of these positions can act as a hedge to protect themselves against to protect their short position exposure. And this might be one of them. But yeah, we'll never know the intent for sure. But based on the size and the position, percent out of the money, delta, gamma, other information, we can sometimes predict or properly gauge what the intent of the position might be. But yeah. Okay, so this is a somewhat bearish position. This trader is betting that the price will not go above 440 in about a month. Yeah, so this would be a good position to set up if you're thinking that, if you're not sure, if you think that the price might be rising a little or dropping a little, but mostly staying flat, maybe this might be a good position to place. Just always know the risk. This one is bullish as well. A huge position, betting that the price will go above 370 in about a month, potentially passing 390. Yep, this one as well. We talked about these. So these two positions right here, they're most likely just bullish directional bets, not hedgings. Huge positions. Later in October, we will be able to show some of the. I'll be able to show you some of the net premium on some of these positions. That should be more interesting, so we can see exactly how much premium these positions were paid for, or how much premiums they might be collecting in this position, for example. But yeah, that should be interesting. Let's continue on the put side. Yeah, this one is bullish as well, betting that the price will not drop below 360 in the coming months. Yeah, bullish, and this again it could be a good position as well if you're betting that the ticker is bullish, but you're not sure how aggressive or how far it will travel. This could be a good position to place. And this one is also this one is bearish. Betting that the price will go below 365 in about a month's big position. So we're starting to see mixed signals here. Let's continue. Okay, this one already gone over, bullish. Let's continue here. This one as well. This one is also bullish. Okay, so also betting that the price will not go below 355. So we're seeing spread positions potentially acting as support and resistance, right? With these two positions plus this one up here, we might see more of those in the iron condors positions soon. But yeah, these are interesting. So we're definitely seeing mixed signals here, bullish and bearish, and some are less aggressive directional bets such as these two right here, essentially giving the stock a wider moving range as long as the price stay flat or goes up, or even if it drops a little bit, as long as it doesn't pass the short leg here, this trader will be making profit. Let's continue. This one we've gone through. This one as well. So yeah, with the spreads, we're seeing mixed signals here. So let's go to the iron condor. Yep. I think these positions picked out by our system is newer positions in the last few days. This one, yeah, just a very standard iron condor positions. These positions are betting that the price will not go too much in either directions in the coming month. Essentially, they're collecting premium on this stock with elevated implied volatility because of the earnings report. So yeah, this could be a good position to set up if you think that the price will not move much during or after earnings, and this could be a good position. And keep in mind that this type of this ticker can be quite volatile, as we saw in the earlier chart. Last time during his earning report, there's a huge drop in price, crash, and yeah, if you place iron condor during that earnings report, you would be crushed. But keep in mind that these traders are not just sitting around and wait for the price to move around. Professional traders nobody's sitting around and just waiting. Either you're an institutional trader or a market maker, you're always prepared to be hedging against any movement against your position. So, and these could be a part of a larger strategy, a bigger position. But most importantly, if you plan on placing a similar position during earnings to collect that high premium, just be very careful. Just be prepared to hedge anytime. I think we're seeing less iron condors than some of the earlier stocks we talked about before or during earnings report. Definitely there's people are being more careful with this ticker because again, in the last quarter it has crashed quite catastrophically. So yeah, people are being more careful. But there will always be iron condors before or during earnings time because because of the premium. It's just part of many firms' strategy. Let's move on to singles. These are always the most interesting in my opinion, because they're more directional. Their intent is more clear. And this time, yeah, for some reason our algorithm picked up less positions than before. But for at least for the singles position, we might have to change the settings a little bit. But yeah, certainly huge positions our system picked out, like this one right here. This one is very bullish. Quite out of the money here. Could potentially be a hedge for a bigger short position. Yeah, I would say definitely this one is definitely most likely a hedge position. This one I'm not sure. Maybe directional, just like the spreads we saw earlier. Yeah, it could be bullish. Yeah, a lot of times when you look at these positions, it's just because somebody's buying call or puts, it doesn't necessarily or naturally mean that they're bullish or bearish. You got to look at the big picture, and these are often potentially hedging positions, or just a part of their trading strategy. Like, for example, a lot of times you might see single positions outside of for example, the iron condors. These could be hedges for the bigger short position, or it could be hedges for an iron condor position, just in case if it charges out, if it breaches the short leg of the spread or iron condor position. So yeah, many possibilities. You have to look at the big picture to see exactly what they mean, what they if they're bullish, or if they're or if they're bearish, or if they're just a hedging position. But yeah, later when we start showing the net premium here, I think we can tell more clearly what type of positions they, if they're bullish or bearish, the sentiment of the position better once we see the size of the position and also the premium paid. So yeah, that should be very interesting. Be excited to show you guys that later. This one is bullish. Oh, now this is interesting. This is a bullish position. This is unique. This is betting that the price will not drop below 360. Selling put positions, and this is what we would call a naked put, and or cash secured put. Yeah, this is a very bullish position. As long as the price stays around this range or goes up, this position will be making a lot of premium. And what's good about this type of strategy is, first of all, it's cash secured. So especially for retail traders, if you're going to place this type of bet, it will be cash secured on a margin account, and yeah, you'll be collecting a lot of premium. And here's a cool thing about these positions: even if the price does drop below 360, a lot of times it's okay, because you only place this kind of high risk position on a ticker that you trust, that you're willing to own shares on. So even if the price does drop below 360, you're prepared to execute. Either you exit the trade or you execute the contract, and you end up owning the shares of this ticker. So if you do plan on placing this kind of bet, always remember, at least if it was me, I would only place this kind of bet on a ticker that I trust, that I plan on owning anyways. In case even if the price moves against me, I'm prepared to own the shares of that ticker. Yeah. Oh, okay. Wow. This one as well. This one is also bullish position, betting that the price will not go below 350. Very similar to that one. Same story, same concept as this one. Huge positions. Let's see. Okay, this one is bearish. Directional bet. Actually, this one is likely a hedge for a bigger position. If you own a lot of stocks for a certain ticker, right before earnings, especially in this ticker where we saw a catastrophic drop in the last earnings, and now we're coming very close to the next earning in September 2nd. And if you own a big position in Broadcom and you don't want to sell it, but you're worried that there might be another drop, this is what you can do right here. A bearish position, a hedge, just in case. If it does drop violently, this position will act as a protection for your longer position. Of course, if it doesn't really move, or if it rises, you just wasted money on this protection. But it's just balancing risk and reward. It's really up to you how you set up your portfolio, how you manage risk. Yeah. So there you go. Hopefully the video was helpful. If you have any comments or feedbacks on any of the videos or details here, please leave it in the comment section. Thank you so much for watching. Have a good night.